Okay, so it's time to review your home loan. Now, I believe we should be doing this every 12 months, regardless of the current conditions. Right now, as you all know, we are experiencing record low interest rates at present, but I've got good mail that there's going to be a further 2 rate cuts this year by the RBA. Now, whether the banks pass that on, who knows? However, Bank West today have come out and slashed their fixed principal and interest rate for 5 years by 1.25%, I think. Now, that's not an endorsement by for Bank West by any means, but it shows you that rates aren't going anywhere soon. But it also shows you that the environment is very competitive to go and ask for a better deal, right? So the first thing I'd recommend is go back to the bank or banks that you've got now with your loans and say, what can you do for me, right? Now, if the answer is nothing, great, that's the first step. If the answer is we can knock something off it, then your job's done. If they're saying we can't do anything, then the next step is go to your broker and ask them to check across 20 or 30 lenders and see what's trending right now. Now, yes, there's paperwork and a small fee maybe to transact across, but in the long run, you've got to do the maths to see what's going to be more beneficial. Again, short-term pain, long-term gain. So the next 12 months, 2 years, I personally don't see rates increasing. So from a variable to fixed perspective, I would be looking at variable only, unless we want certainty in our life, right? If we want certainty in our life because maybe we're dropping in income or there's job uncertainty or something like that, then fixed is a solid option. At least you know what you're up for, right? But understanding that if the variable rates are going south and not north, then you'll benefit from that as opposed to having it fixed where that's what it is. So hope you got something from that. As always, sing out if you need anything.